Hi everybody, this is Lara with your end of the week video analysis for gold for the trading week ending Friday 31st of August, the last trading day in the month of August. My analysis of GDX I've got some reasonable confidence in. It's very bearish and that supports the combination wave count for gold, which has a little bit more support at the end of this week from classic technical analysis. It looks like gold is going to continue lower. The target is now at 1132. If price turns upward and now breaks above the upper edge of the channel on the daily charts, only then can we expect a continuation of upward movement to last several weeks and reach up to test resistance at 1035 to 1310. The trend is still down. I'm going to look at the combination wave count first, and again this week I'm going to go over all 4 weekly charts for gold. We're going to consider all possibilities. That's absolutely essential when you expect for the bigger picture that a B wave is unfolding. B waves are the absolute worst, and we've been in one now for a couple of years. This has been a really difficult time to analyse gold. When B waves begin, there are more than 23 possible corrective structures that they can take. I've counted up all the different types of flats, combinations, triangles, zigzags, multiple zigzags, all of those. There are more than 23 within all of those different types of corrective structures, and B waves of all the Elliott waves exhibit the greatest variety in structure and price behaviour. They are the most difficult waves to analyse. That's why it's essential when you think a B wave is unfolding to always consider alternates. Going with only one wave count when it's a B wave, not a good idea. It's probably going to turn out to be wrong unless you're very lucky in picking a winner, and that's not what I'm going to try and do here. And so we have what looks best as a 5-wave structure down for cycle A, likely over here. This is where an A wave ends and a B wave begins. I do also, for my super cycle, for my larger picture, my monthly charts, look at the possibility that cycle A could have been a 3. It could also fit as a double zigzag, so I consider both of those possibilities at higher time frames. But for the lower time frame now, at the weekly chart level, I'm considering what possible structure could cycle wave B be. And could it be over? The answer to the latter question is no. I cannot yet see a complete structure for cycle B. I expect it is continuing. Let's first consider a combination, and my research so far shows that by far the most common 2 structures in a double combination is one zigzag and one flat correction. So far I've found I think only one double combination on the gold market going back to 1975 where the Y wave was a triangle. They are almost always flats when wave W is a zigzag. And so here we may have the first structure complete in a double combination. This is a zigzag labelled primary wave W. The double may be joined by a complete 3 in the opposite direction. This is a zigzag labelled primary wave X, and it's relatively deep. X waves within double combinations are usually very deep to achieve the purpose of a big sideways look. These are big sideways structures with huge swings from resistance to support and back again. If this is where primary wave Y begins, it is most likely by an extremely wide margin to be a flat correction, and they subdivide 3, 3, 5, and flats have a minimum requirement for their B waves to be a 0.9 length of their A waves. Here intermediate wave B would reach the minimum 0.9 length of intermediate A at 1147.34. So this wave count requires more downward movement. Intermediate wave B may be a single or double zigzag. I could be labelling this A, B. C could be over here, 1, 2, 3, 4, 5. We could be looking at X complete now and Y unfolding lower. I'll consider that at the daily chart level if I need to next week, but in the short term it doesn't diverge at all in differences in expected direction for next week. If intermediate B is a single zigzag subdividing 5, 3, 5 with a long extended C wave, then C has to be a 5-wave structure, 1, 2, 3, 4 and 5. 4 may not move into wave 1 price territory above 1282.20. This wave count requires more downward movement, expects it, and when intermediate B is complete, then it expects a huge big 5-wave structure up for gold for intermediate C to end beyond the end of A to avoid a truncation, and to see primary wave Y end about the same level as primary wave W, not too much above it, so that the whole structure for the double combination takes up time and moves price sideways. Let's take a look now at the daily chart for this idea, where we're going to look at the structure of minor C, where minor B is this point here. I've adjusted the labelling of subdivisions within this wave count to consider the possibility that minute 3 was over here and not here. Minute wave 3 over here now exhibits no Fibonacci ratio to minute wave 1. I was previously seeing it over here, and there it was close to 1.618, the length of 1. It could also fit if it's over here, and the size and duration of this upward bounce now looks better if it's labelled at minute degree. This has a better look, this relabelling. If this bounce is minute 4, and if it continues any further, as it certainly could, then it can't move into wave 1 price territory above 1282.20. But this idea would be discarded long before it reached that point if price broke above this channel, which is a best fit channel copied over from the weekly chart. Then I would discard the idea that minor wave C is continuing further. Upward movement for this piece of movement, now that we've got some downward movement back into this here, cannot be a continuing upward impulse. We can't label it 1, 2, 3, 4, 5, because 4 would be what would be in wave 1 price territory. So that tells us that this upward movement at the daily chart level looks quite strongly like a 3-wave structure. That looks like a counter trend movement. So even though this downward trend is very extreme and reached reasonably oversold at this low, and we had a candlestick reversal pattern, it looks like we may still have a downward trend to reach even further extreme, that we may have further lows, because this now looks like a counter trend movement to relieve extreme oversold conditions. There is again now room for price to fall. This wave count has support from classic technical analysis. My target for downward movement is for minute 5 to reach equality in length with minute wave 1. That's the most common Fibonacci ratio for a fifth wave to exhibit. And when the third wave does not exhibit a ratio to the first, it is then more likely that the fifth wave will exhibit a Fibonacci ratio to 1 or 3, and most commonly they exhibit a ratio of equality to 1. Here's the minimum requirement. The target would see that minimum requirement for intermediate wave B met and passed. At the hourly chart level, here's the end of minute 4. This upward movement fits very well. It fits best as a zigzag. If we're looking at minute wave 5 beginning down, we may have a series of 1, 2, 3 almost complete overlapping first and second waves. Micro 2 may not move beyond the start of 1, above 1208.28. When it's complete, we should then have a third wave down at 3 low degrees. Some increase in momentum to the downside may be expected to begin to develop, if not develop quite strongly, next week. At the weekly chart level, this is the next option for cycle wave B. It could still be continuing further sideways as a huge triangle, a regular contracting triangle. This wave count has an excellent fit and follows a very common pattern. There could be a zigzag for A and B, a double zigzag for C. This is the most common triangle subwave to subdivide as a multiple, so fits a common pattern. A zigzag could be complete now down for D, and this wave count now expects a 3-wave structure up to test resistance about 1305 to 1310 for primary wave E, the final triangle subwave, to most likely fall well short of the AC trend line. That's the most common look for E waves of triangles. This wave count expects a reversal. We do have a bullish piercing pattern here at the weekly chart level after this low with this bar chart data. We do have a candlestick reversal pattern with stock charts data as well, but the problem with candlestick reversal patterns is they tell you that the trend may be changing, but they don't tell you what it's changing to, because there are actually 3 directions. There's up, down and sideways. Candlestick reversal patterns don't tell you what the next direction is, if it's then a complete 180 degree turn or a change to sideways. And the other thing they don't tell you is how long the next movement may last. They don't give any comment on targets or duration for the next trend expected. And so the candlestick reversal patterns could be just telling us to expect a short-lived sideways piece of movement, just as much as it could be telling us to expect a 180 degree change and upward movement. We can't tell which of those 2 scenarios it's identifying here for us. And so this wave count is possible. For this wave count, the BD trend line of this possible Elliott wave triangle has some slope. It's not a very steep slope. The AC trend line has also a reasonably shallow slope. If D is over here, the triangle trend lines are still converging at a reasonable rate, but if D were to continue any lower, then the triangle trend lines, if it were to continue lower and end around about B for a barrier triangle, the triangle trend lines here on the weekly chart would not be converging at a reasonable rate, and that would not have a normal look for an Elliott wave triangle. And so for the triangle wave count, it looks much more likely that D really should be over here. The triangle wave count really does need to see a continuation of upward movement, and this last weekly candlestick isn't really very convincing. Let's take a look at it at the daily chart level, where intermediate B is this point here. Intermediate C certainly could be over, an impulse labelled 1, 2, 3, 4, 5. This labelling also fits. This is a different way to label this downward movement. I'm not counting this subdivision in the same way I'm counting it on the other daily chart, and that's the material difference here. But now, after Thursday's downward movement, this wave count has a problem. We have to see a first wave complete from this low to this high, and at the daily chart level, it looks quite strongly like a three-wave structure. At the hourly chart level, you can see it subdividing as a 5, and I did publish a possible solution for the daily Elliott wave gold members last week, but at the daily chart level, the disproportion within the corrections within minor wave 1 do give it a three-wave look. We have to admit that this looks like a counter-trend movement, and that does not fit this wave count. But what if that's wrong? Sometimes gold's waves don't always look perfect, and sometimes you have to look at a different time frame to see the subdivisions, and this will fit. It could be we're only going to get a little bit of downward movement next week to complete a zigzag or possibly a double zigzag lower for minor 2, which may not move beyond the start of 1. If we do get a new low, I'm probably going to discard the triangle wave count prior to invalidation reasonably below this point, because at the weekly chart level, as I just outlined, because of the triangle trend lines, it's just not going to have a very good look anymore. This wave count expects a multi-week to multi-month, possibly bounce, to last maybe a Fibonacci 8 or 13 weeks for primary wave E to reach up back to resistance, which was good strong prior support about 1305 to 1310, and to be a three-wave structure as outlined at the weekly chart level. Primary E may not move beyond the end of primary C, not even a tiny bit above 1365.68. That would firmly and finally invalidate the triangle wave count. At the hourly chart level, A, B, C and 1, 2, 3 subdivide in exactly the same way. The subdivisions are seen on the hourly charts in exactly the same way, but here it's labelled a possible zigzag for minor 2, A, B and C to unfold lower, maybe to bring minor 2 down to the 0.618 Fibonacci ratio, about 1181, and possibly also lower, because the second wave correction for a new trend for gold is quite often very deep, quite often deeper than the 0.618 ratio, so look out for that one here. At the weekly chart level, this is another possibility for cycle B. We have to consider alternates because this is a B wave. What if it's unfolding as a flat correction? And that's actually a really common structure for B waves, so far I have found in my research on gold. So let's look at the possibility of a flat for cycle B. Flat correction, subdivide 3, 3, 5, and the B wave within a flat needs to reach a minimum 0.9 the length of the A wave. For this flat correction, that's at 1079.13, and this low is above that point, so we cannot label primary wave B over here. That would violate an Elliott wave rule. Primary B has to be continuing, it can't be over there if cycle B is a flat correction. Attention now turns to the possible structure of primary wave B within cycle B. It too could be a flat correction, subdividing 3, 3, 5. Intermediate C needs to be a 5-wave structure, 1, 2, 3, 4, could possibly move a bit higher, and 5. 4 could take up a little bit more time for this option so that it's got better proportion with 2. Now it could also be over here as a relatively brief shallow zigzag, and sometimes for gold its fourth wave corrections are quicker than its second wave corrections. That happens because the fifth wave of the third wave ends with very strong movement, and the following fifth wave after the third wave is swift and strong. That's typical commodity-like behaviour. Here's a perfect example of what I'm trying to explain. Here's an impulse I've labelled minus C. It subdivides 1, 2, a deep, relatively time-consuming zigzag, 3, a quick little correction for 4. We can see it on the daily chart. It doesn't show up so well at the weekly chart level. And a final fifth wave down with strength for the fifth wave. Within this third wave, the strongest piece of movement is a fifth wave within it. That's typical commodity-like behaviour. When that happens, it tends to force the fourth wave associated or next to it to be more brief and shallow. Another strong little fifth wave here. The strength of this fifth wave looks like it's forced this fourth wave to be more brief and shallow. And so the disproportion between the second wave and a fourth wave for a commodity is entirely acceptable and fits with commodity-like behaviour. Those swift, strong fifth waves, in classic technical analysis terms, can complete as blow-off tops or selling climaxes, typical commodity-like behaviour. And so I'm going to label minor 4 as possibly going to continue here because it would have better proportion to minor 2, but be alert for the possibility for this wave count. It could also be over here. If we see downward movement start to develop with strength next week, I will label minor 4 over here. We'll look out for the possibility that downward movement could reach down to 1079.13 or even below. Because if cycle B here is a big flat correction, then primary B within it can make a new low beyond the start of primary A. That is entirely possible. If we get a new low below 1123.08, we can have some reasonable confidence in this wave count at the weekly chart level. At that stage, we'll be looking out for the possibility of a new low below the end of cycle wave A here. And finally, what if cycle B is a double zigzag? So far at this stage, these are the 4 different wave counts I can see for cycle B. The first zigzag in a double could be complete, labelled primary wave W. The double could be joined by what we classify as a 3 in the opposite direction, labelled primary X, and primary X could be subdividing as a triangle. While X waves are most commonly zigzags, they're not always zigzags. This doesn't follow the most common pattern, so it has a lower probability in terms of Elliott wave, but it's an entirely valid wave count. Attention now turns to the possible structure of primary wave X as a triangle. We could have a single zigzag for A, a double zigzag for B. This is not the most common triangle subwave to subdivide as a multiple, but sometimes B waves do that. So again, this wave count is not following the most common pattern, so in Elliott wave terms, that has to reduce its probability. It is still an entirely valid wave count. Sometimes lower probability outcomes do occur, and the very nature of probability means they're never what you expected as most likely. Here we could have a completed zigzag for intermediate wave C. For wave C of a contracting or barrier triangle, and it could be either type, wave C may not move beyond the end of A. A new low by any amount at any time frame would very firmly invalidate this wave count at the weekly chart level. This wave count now expects a big strong bounce for intermediate D. This does not have good support at this stage from classic technical analysis, which may end either before it reaches intermediate wave B, as in a contracting triangle, or it could end about the same level as intermediate wave B if we're looking at a barrier triangle. In fact, it can end slightly above the end of intermediate wave B. As long as the BD trend line remains reasonably flat, a triangle here will remain valid. Finally, intermediate wave E could be a short, relatively brief zigzag down to fall reasonably short of the AC trend line, and then this wave count expects another zigzag to move quite substantially higher. Double zigzags and double combinations are labelled WXY, but they are quite different structures. Combinations are sideways movements, analogous on smaller time frames to flags. At larger time frames, big, choppy, overlapping, sideways consolidations. Zigzags are sharp corrections, and double zigzags, part of the zigzag family, look like single zigzags in that they all should have a pretty good slope against the prior trend. To achieve a good slope against the prior trend here is down. To achieve a good upward slope, the second zigzag in the double should move substantially beyond the end of the first. And so when intermediate X is over, I'd be calculating a possible target, when primary X is over, I would be calculating a possible target for primary Y to be probably about even in length with primary W, which would be quite a high target for gold. This wave count is possible, but it does not have as much support from classic technical analysis. Let's have a look at why I'm saying that. At the weekly chart level for gold this week, we have a higher high and a higher low, but the candlestick has closed red. The balance of volume was down, and downward movement within the week has support from volume, and so that's bearish. But let's look inside this week at the daily candlestick bars to see which days, up or down, have more support this week. There's resistance about 1225. We do have certainly a downward trend here developing. ADX has told us there's a downward trend for gold. It's now reached very extreme though. Well, it's now reached extreme in that it's above both directional lines, but it could reach further extreme. When gold has a strong trend, ADX can reach into the 40s or 50s, and it can remain quite extreme for reasonable periods of time. So this trend could continue. ATR is declining though. There is something weak about this trend now that absolutely fits the idea, the Elliott wave idea, that this is a B wave unfolding. B waves are suckers, and there should be something off or wrong about them. Not only are they horribly difficult to analyse, but they should come with weakness. Consistently at the weekly chart level, declining ATR, while price is in a huge sideways chop. That's absolutely typical of a B wave. Gives me a bit more confidence in the bigger picture. My Elliott wave count expecting a B wave, is unfolding. RSI reached oversold at the last low, and looking back over the last few years during this B wave, when RSI reaches oversold at the weekly chart level, that's usually been the end of the downward swing. But when gold has a strong trend, RSI can reach oversold more deeply and remain there for longer before an end to that trend is seen. And in the reverse case for a bullish trend, and RSI reaching overbought is also true. And so it looks like we may have a low here, but let's also look at the daily chart level. This is a warning that that triangle Elliott wave count could still be the right one. Stochastics reached oversold and there exhibited some bullish divergence. Now it's returning up into neutral. That also looks like we may have a low in place. The long lower wick here of this candlestick also is bullish, and we had not a bullish reversal pattern here. This is not a harami, because a harami requires the second candlestick in the two candlestick pattern to be a spinning top with a small real body. This is quite a reasonable real body on this candlestick, not a spinning top. This is not a reversal pattern. It's also not a piercing pattern because it hasn't opened below the close of the prior pattern, but it is a reasonable bullish candlestick, and so that looks reasonably bullish. But now we've got a downward movement within this week. There is still, however, bearish divergence, and I will give this one quite a lot of weight. Now this supports the combination wave count. On balance, volume should be read as a leading indicator, and when it reaches new lows or highs before price, that tells you there's quite a high probability, not certainty, a high probability of price following through. This bearish divergence quite strongly supports the combination wave count. It tells us that for this analysis, it's quite likely price is going to reach new lows below this prior point here. But we may have some consolidation along the way first. At the daily chart level, we have had some consolidation, and this looks like a counter trend movement. During this movement, it's these two recent downward days of the most recent movement which have strongest volume. This downward movement here and downward movement within this session has support from volume, and so that is reasonably bearish. On balance, volume has a new range. It's not a strong technical range though. The support lines only had two tests, so it's only just able to be drawn. A break below support would be a weak bearish signal. A break above resistance, also a weak bullish signal. RSI reached quite oversold at the low, and we did have a candlestick reversal pattern, a hammer. This little upward bounce has relieved that reasonably extreme oversold condition on the daily chart level. There is again room for price to fall. ADX has declined. It reached very extreme for the previous downward trend. It can remain there for quite a long time for gold when it has a good trend. It's declining now. Its price is moving weekly higher, telling us that the trend is relieved by some consolidation. And we're seeing a little bit of an increase at the daily chart level from ATR, a little bit of strength returning to this market in this downward trend. Stochastics almost reached overbought. Now this is another signal that this little bounce could be a counter trend movement, and it could be over here. Despite the strength in this upward day, which looked quite bullish, the following 5 candlesticks are not continuing that bullish at all, and now we're starting to see a little bit of more support for downward movement. Stochastics has almost reached overbought. It's now returned into neutral. That could be the end of this upward swing. Bollinger Band's contracting as price moved higher and now a little bit sideways. Also typical behaviour of a consolidation. Also can happen during the early stages of a trend. And MACD still reasonably bullish. Not full bore bullish. It's below the zero line, but it is bullish. That's all for me with your gold analysis at the end of this week. And I hope that all of our members are having an absolutely fabulous weekend.